What's up, guys? Joe Fileman here, back with another installment from my channel, Rolling in Crypto. Today is March 16th of 2018, and I'm going to be talking to you guys about something a bit different than I usually do here, alright? First and foremost, I just want to make it very clear that one, I am not a financial advisor, and I am not your financial advisor. Secondly, these videos are meant to be completely educational as far as the history of the markets, and not investment advice by any means, and you should not use this as investment advice moving forward. For myself, I'm just going to be outright with you guys. Over the last week, I've taken 85% of my equities and I put it into gold and silver, and I'm going to explain that a bit further into this video. So first, let's go over a bit of a market history of our equities markets, and we're just going to use the Dow Jones as our example because it's easy and set up on TradingView, and I already have this chart that I built out. So first and foremost, Black Monday 1987, the huge crash that happened on Black Monday that went through the week and then actually ended up continuing through about 89 into a mini crash as well. Moving forward from there, the drop of 1990 when Iraq invaded Kuwait caused a pullback of about 18% relatively quickly as well. That's a bit of a one-off event, and it really just kind of happened because of that little instance. Moving forward from there, in 2000 we had the tech bubble crash. The tech bubble crash, often referred to as something similar to the space where everybody was buying .com bubble, and essentially, well, it was called the .com bubble, and everyone was buying anything that had anything with the .com in it, and it was a technical company. Moving forward from there, we have the biggest crash in recent history, and that was from 2007 to 2010, where we had a huge pullback, and finally finishing out with a 1,000 point flash crash on the final day, where it got bought up and we actually went bullish from there. So moving forward from there, we can see it's been 9 years since the finish of that crash, and I would just like to point out a bit of a similarity here between our equities chart and our Bitcoin chart, and that is just the outright equity yield, or the huge equity yield curve we can see here. Just absolute parabolic yield curve, and very similar to what we saw in Bitcoin very recently. So as you guys know, I'm a huge proponent for cryptocurrencies, but this video is not really going to talk too much about what you should be doing in said situation with cryptos. I'm putting a decent amount of money in cryptos, but I think it's more important to recognize, guys, that you can't keep all of your money in one asset. So rather than putting your money in cryptos, I think a good idea, and what I did with my money, is I bought physical gold and physical silver, and I took about 45% of my equities portfolio, and I've actually put it into physical gold and silver. And let me reiterate that one more time: physical. Do not buy futures contracts. Do not buy ETFs on gold and silver. Buy the physical stuff and put it in a safe and leave it. Gold and silver will withstand if there's hyperinflation. It will withstand if there's an economic downturn, and that doesn't happen. And we talk about the flattening of the yield curve and the inverted yield curve, and when those effects actually come in with a flattening out on your yield curve, it is good to be in a hedging device like gold or silver that will always remain having value. So as far as what I'm seeing right now in the chart, we can see this bear flag that has been sitting in here, and if you've been tuning into the streams, I get asked about my opinion on equities fairly frequently, but right now, as you guys know, we've been kind of watching to see if we would be able to get back above that 26,325 level, and unfortunately we haven't. So to me, as a technical analyst, this means that we were unable to recover our sell-off, and we are most likely going to continue in this bearish trend. Where it sits right now, we can see our one touch principle right here. With the one touch, we expect a bounce, or a recovery, where you see retail investors buying up this opportunity in the dip, and if you were able to, on the bounce, recover this level where we would expect right here, but we were unable to, then we look for a bear flag formation, as we are seeing right now. So as we sit in this consolidation pattern, and we have this bear flag forming, this is essentially where you're seeing retail investors that aren't very savvy and understanding in technicals buying up pretty much where institutions are selling off. So the longer we sit in this consolidation pattern, the more likely that institutional investors are just continually emptying their bags, and that's extremely interesting to me, and that is definitely something that you need to consider if you are invested in equities. So just want to point out a couple of other things. We can see really quickly here the massive amount of silver holdings that we see between a number of the large firms, basically just holding on to a massive hedging device. And I actually bought up more silver than I did gold, and I usually add a bit to each of my piles when I get the opportunity, but I usually buy more gold. But as of late, I've been buying more silver just because I've seen large these multinational conglomerates like buying it up, and it's very clear in their balance sheets. You can actively go and look at them. They're transparent about it, and you can notice that essentially that these huge corporations that handle people's money for a living and are huge because of their success and ability to continually handle people's monies with success, are buying up silver in this current market. So that's what I'm doing right now, guys, and I just wanted to fill you guys in as far as the fact that I am 85% out of my equities positions. I do intend to move out probably a little bit more and push myself up to the 90-92% range, and that's pretty much my plan for this market as it sits right now. I don't intend. A lot of people have asked me if I would short the market. I wouldn't. There's other opportunities to trade, and shorting an index is pretty crazy in my opinion. But trying to time that short is up for somebody else to do and not for me. Thank you guys for tuning in. I know this is a bit different a video, a bit more dry than I usually do. Don't worry, we'll be back to the cryptocurrency videos soon. If you haven't already, please go down below me and jump into my Twitch whenever, if you guys want to ask me questions about anything I just talked about. But as always, guys, please trade safe and give yourself the best opportunity you can moving forward.